Hi. In this video, I'm going to share the exact investing strategies I used to go from a beginner investor with very little money to a multimillionaire by the age of 35, and how you can do the same. So here's a simple question for you. Do you want to be rich and have the freedom that comes with being financially stable? Most people do. Why do you think there are so many get-rich-quick schemes out there? But here's the thing. Most people have what I call a lottery mentality. They're just waiting for that magic moment when they get a big windfall. Do I look like the magic fairy to you? If the answer is no, and I really hope it's no, smash that thumbs up button and hit. Now, the truth is, a lot of people think that winning a big chunk of money will solve all their problems. But I'm here to tell you, without the right investment strategy and mindset, that money will be gone before you know it. To build real wealth, you need a solid, consistent investment plan. Long-term investing will get you the best returns. When I was younger, I always dreamed of being a race car driver. I loved everything about cars, but I didn't have the money to pursue it. But as I started building my investments, it allowed me to race in multiple championships. Investing also lets me spend time doing things I love, like making YouTube videos. And just to be clear, I don't make money from this channel. I'm not trying to sell you anything here. But let's get back to the point. There are tons of investment options out there. It's easy to get distracted by the next shiny object, and it's even easier when someone tells you that this is the best thing, the latest and greatest. They say, if you don't invest, you could miss out on thousands. The key for me is not getting overwhelmed by the latest trends. Let's face it, you're never going to be an expert in everything, and constantly changing your investing strategy will only end up with you losing money, or worse, making a huge mistake. That's why I've kept my core investments simple and consistent over the years. I only put large sums of money into things I fully understand. I'm not claiming to have all the answers, but I'll be completely transparent with you about what's worked for me and helped me build a multi-million-dollar net worth. Just a heads up, I'm a businessman, not a financial advisor. So, this isn't financial advice. It's just what I've done, and it's worked for me. Creating disposable income. First things first, you need to create more disposable income. At the end of the day, you need money to invest. The more money you have, the better, especially when you're in your 20s and 30s. Now, a lot of people will tell you to save, save, save. Don't go out with friends. Skip that overpriced coffee. Don't buy a nice car. I don't completely agree with that. Sure, saving is important, but you also need to enjoy life. You can't make yourself miserable just to save a few bucks. Instead, focus your time and energy on increasing your income. You can do this by learning new valuable skills, taking on a side hustle, or building a scalable business. Don't settle for just your 9-to-5 paycheck. You should be finding ways to supplement it, or even replace it altogether. When I was in my early 20s, I realized that my income as a sculptor, earning less than $3 an hour, wasn't going to cut it. It barely paid my bills. I needed a way to increase my income dramatically. That's when I dove into the world of business. And let me tell you, investing and business go hand in hand. The more you learn, the more you earn. And most importantly, the more you can invest. Pay off debts. The next thing to do, pay off any high-interest debts. Whether it's student loans, credit card bills, or payday loans, those are pulling you down and destroying your credit score. If you want to take advantage of good loans in the future, pay those off first. Once your debts are paid off, create a freedom fund. This is my term for an emergency fund, 3 to 5 months of living expenses. It gives you peace of mind and the freedom to make decisions without stress. Index funds. All right, now that we've increased your income, cut your debt, and created your freedom fund, it's time to start investing. Let's start with the least risky option, Index funds. An index fund is a collection of investments, giving you a percentage of the entire thing. This gives you fantastic diversification and protects you from poor stock choices. Let's say you invest $1,000 into Apple stock. If the company hits a rough patch and the stock crashes, you could lose most of your investment. But with an index fund, instead of just owning Apple stock, you own small pieces of Apple, Microsoft, Amazon, Facebook, Visa, and many others. If something happens to Apple, the other stocks balance it out. Mutual funds. Now, some people will try to tell you that mutual funds are superior. A mutual fund is similar to an index fund, but it's actively managed by a professional. The goal is to beat the market and get better returns for you. But in most cases, you're better off investing in an index fund. Why? Because index funds have extremely low fees, like the S&P 500, which charges just 0.07% annually. Compare that to mutual funds, which charge between 1% to 2% annually. If you invested $10,000 in a mutual fund, $200 of that would go straight into the manager's pocket every year, even if they lose you money. On the flip side, if you invested that in an S&P 500 index fund, you'd only pay $7 annually. Real estate. For me, the biggest investment success has been real estate. I prefer real estate because it's a tangible asset, something I can see and touch. My first property was a one-bedroom apartment that cost $50,000. I rented it out for $500 a month. I held it for about 10 years and sold it for $150,000. When it comes to real estate, you can be one of two types of investors. 1. Capital gains. Investors. These investors buy properties at a low price and sell them for a profit. 2. Cash flow. Investors. This is what I prefer. I'll only buy properties where the rent covers the mortgage. For example, if I buy a $100,000 property, I want it to bring in at least $1,000 per month in rent. Individual stocks. Individual stocks can be risky, but they're also very attractive to many people. You can buy a stock with just a small investment and sell it any time. When I was in my early 20s, I invested $5,000 in stocks. 6 months later, I made a profit of $100,000, and that money helped push my business forward. But here's the thing. Don't invest in something you don't understand. I value two types of analysis when evaluating stocks: quantitative and qualitative. Quantitative analysis means looking at a company's earnings reports, balance sheets, and cash flow to determine its true value. Qualitative analysis is more about the company's potential. For example, Tesla is a great company, not just because of its numbers, but because of its innovative products and visionary CEO, Elon Musk. Private business investments. Finally, let's talk about private business investments. This is where I mix investing with my business expertise. It's like Shark Tank, but on a smaller scale. I often get investment opportunities from people who need my business knowledge in exchange for a stake in their business. For example, I recently invested in a hotel supply business in China. I got to help open doors in the English-speaking market and even got to travel to China to inspect the supply chain. This is where your skills and connections can really pay off. I hope you found this video helpful. If you did, please smash that thumbs up button and subscribe to the channel. And if you want to learn more about increasing your income, I've got another video for you right here. What are you waiting for? Click it now, and I'll see you in the next video.